All right, today's market analysis will be on the NASDAQ on how bullish it just was and how efficient price action was today, right? I had one trade, one win, but I was literally calling it out live the whole way through. So a lot of people made money. Well, I think like 3, 4 people made money that was live at the moment. So let's go right into the analysis. 9:30, what are we looking for? 9:30 candle is right here. So before 9:30 happens, right, what do we have? We have a breaker. We all know a breaker is a low, high, lower low, higher high. So that was the first thing I drew out, which was, and this is the fair value gap, right? No, I'm sorry. This is a fair value gap right here. So it did the first, it did the low, high, lower low in a area where I'm expecting it to bounce at, which is this 15-minute bullish fair value gap, and then did a higher high. Now, you draw it out. Now remember, if I'm bullish, right? If I'm bullish, when it gets to certain zones, to the breaker, I'm allowing it to trade in the upper half of the zone, right? If I'm bearish, you will want to see it go lower, right? Anyways, so we got the low, high, lower low, higher high. Now you want to wait for it to come back into the breaker, right? It gave us the first touch, displays higher, right? Then eventually took out the high. Then it came back into the zone again, swept these small internal lows right here, swept it, but still stayed in the upper level of this zone, right? It didn't go to the lower half of the zone. Key, and another key is there's no candlestick closures down here. And right here, there's a small fair value gap that will be a breakaway, right? Then it came back into it one more time at 9:38 before creating the first presented fair value gap. Tapped into it, displaced higher, taking all of the buy side that it just created. Now 9:38 happens. The first presented fair value gap gets created, right? The first presented fair value gap is exactly what it says. It's the first presented fair value gap that happens after 9:30. In all of this consolidation, there's no fair value gap, right? Finally get our first one coupled with the just bounce off the breaker. Now it's another order block off of this zone. That's why it comes down. It don't even have the willingness to come to this breaker again. Because why? This bearish candle is a new order block. Why? Because we have a down close candle and an aggressive close above, leaving a fair value gap, which is right here. But what we see this fair value gap, right, got disrespected, right? Because remember, sometimes price action is just not going to just respect everything all the time, right? It's not going to do that all the time. But that's why you got to know how to read price action in order flow to understand, okay, where can it potentially stop at? Which is right here, this low. If it would have came down and took this low, now I would have been thinking a little bit more differently, but it stopped. It didn't even have the willingness to come back down again to take this rejection block of this order block. Then it displaced higher, right? At first, what it was doing, it was trading in the lower half of this fair value gap. Remember, if I'm bullish, I don't want to see that. But finally, once it broke up out of there, right, it started closing in the upper half outside of it, and then the wicks are underneath it. And then look what happened. You don't see no more candlestick closes underneath. Only thing you see is the wick stopping at equilibrium of this 1 minute bullish fair value gap coupled with the order block. Then we get another displacement, runs away, takes the high. Now, this is the new zone we're looking at, right? So now it comes back down, bounces it literally exactly at the first presented fair value gap, then it trades away from me, right? It trades away from me. Now we have 1, 2, 3, 4 down close candles, and we have an aggressive bullish candles going up, coupled with a fair value gap, coupled with a market structure shift right here, right? Another entry, but what happened? It didn't even come back down. It didn't even have the willingness to come back down to this zone. Why? Because we're extremely bullish. And because why? It took out this high. Right? It took out this high. And one thing we know is between two highs, there's another breaker. Right? Which is we have a low, we have a high, we have a lower low, and we have a higher high. So now, in this breaker, this is how you draw out the breaker. You find the highest candle, right? And you drag it down. Sorry, hold on. The highest candle will be here. And then you extend it through. This is the breaker. Now, this is the zone we're looking at. This is the play I caught. This is the target. It came down. Remember, it has to. Market has to do four things. They have to generate the liquidity, hunt the liquidity, rebalance to an inefficiency, which is a gap, or a rebalance to equilibrium of the range. Came back, stopped at this breaker right here. Right? We have the breakaway gap underneath. So look what happened. Do you see body candle closes underneath this breaker? No, you don't. Do you see candlestick closes, you see what I'm saying, above it? Yes, we're allowing to leave the lower half unmitigated and to only have candlestick closes on the upper half. We got that. This is where I got into my long gap. We got the 3 down close candles. We got a close above. We got the close above, coupled with the order block. Coupled with the fair value gap. Right? And it was just it was a small trade, but I got in literally right here, and then I just literally targeted the highs, which is 26 points, and my stop was literally right below here. 2.4 R trade. And then once it swept it, I would just tread on my stop. Tread on my stop until they stop me out. Right? So what you're looking at, this zone right here, is literally 9:30 to 12. Right? We still have 30 more minutes of price action. But I already caught my trades, and I'm done with my market analysis. So like I said, I trade live every single day, 9:30 to 12, in my Discord and live on YouTube. Right? If you need any help, if you got some value, if you got some good content in this, please like and comment and subscribe. Right? Because that shows YouTube that the information I'm giving out is kind of good, so they'll start pushing it out a little bit more. Right? Because I'm just trying to become better at this, right? I'm just trying to get better at understanding things and get better at actually articulating my words and just get better with trading overall. Right? So let's do a little quick rundown right quick. So right here we got the breaker, low, high, lower low, in an area where I'm expecting it to bounce at, higher high, right? Coupled with the order block, bounce, displace higher, create an order block here. With the fair value gap, yes, it displayed the fair value gap, but once it got back above, it started holding, then it displaced away for create another order block, ran up, came back down, tapped it to the money, created another order block with a breakaway right here, ran up, took those highs, and now it's consolidating at this breaker. It's consolidating at this breaker. We got a low, high, lower low, higher high. Let me draw it out for you. We got a low, high, lower low in the area where I'm expecting it to bounce at. Higher high. Shit. Right. Came down. Got in my long. Bam. Could have gone to another long right here. Boom. So you don't remember the key information in trading is you need a good risk management. You need to be patient. Right? You gotta have a good strategy, and you need to be disciplined with those four key components, I promise you, you will become a good day trader. It's only a matter of time. Make sure you journal your losses. I don't gotta really. This is my journal right here, so this is why I like doing videos, because I get the journal out loud. I don't really like wanna I still do my journals though. Don't get it twisted. Like I still, let's not get that twisted. But anyways, I catch you on the rebound. See y'all later.